Hello everybody, my name is Mr. Fussell from Business 101. Today we're going to be going over some financial terms and calculations for GCSE AQA. Financial terms and calculations include revenue, costs, profits and loss, average rate of return, and break even. These financial elements inform key decisions in every business. Now I'm going to give average rate of return and break even their own videos, so they won't be in this one more specifically than that. A cost is anything that a business has to pay for. All businesses have costs that need to be paid regularly. Examples of costs for a business include rent, bills, raw materials, staffing costs, and petrol and postage. Costs are split into three main categories: fixed, variable, and total costs. Fixed costs are costs for a business that do not change, no matter what the level of output is for the business. They are usually fixed for at least a year and mean that a business will pay the same amount each week, month, or year. So again, some examples of this include rent, insurance, and salaries of staff. Variable costs, on the other hand, are costs that change depending on the output of the business. These costs are dependent on how much the business produces or sells. Generally, if the business is producing or selling more, these costs will rise. If the business is producing or selling less, these costs will fall. So some examples of variable costs include petrol, postage, raw materials, and wages. So those are obviously paid per hour. So the more they have to work, the more you're going to have to pay for wages, if that makes sense. And then we have total costs. Total costs are simply just fixed and variable costs for the business added together, giving the total overall cost for the business. Calculation for total cost is, as we just explained, total cost equals fixed costs plus variable costs. For example, if a business has fixed costs of £18,500 and a variable cost of £9,250, their total cost would be 18,500 plus 9,250 equals total costs of £27,750. And this brings us to revenue. Revenue is the money that a business makes from selling their products and services, whereas costs are anything that a business pays for. Businesses need revenue to ensure that they can maintain their day-to-day operations and pay the business costs that they have. So some examples of revenue for a florist shop, so that's a flower shop. These are selling flowers and charges for delivering to customers. And then examples of revenue for a web designer would be a fee for designing a website and a fee for maintaining or updating the website. Revenue is worked out using a relatively simple calculation. So revenue equals selling price times quantity sold. Okay, so let's put that into an example. If a florist sold 482 bouquets of flowers for £10 each, their revenue would be £4,820. We get that figure by that simple calculation. So £10 times 482 bouquets sold equals that £4,820 answer. And if a web designer charged £256 to design a website, and in a year designed 25 websites, the overall revenue would be £6,400. And again, that is the 256 times 25, giving us that figure. Profit and loss. Many businesses measure their success based on how much of a profit or loss they have made. Profit is any revenue left after all business costs have been paid. Profit is calculated using the following calculation. Profit equals revenue minus total costs. Where a business's costs are higher than the revenue it has made, this calculation gives a negative number, which would be classed as a loss. Businesses would never aim to make a loss, and businesses making consistent losses may eventually fail. So let's put this into an example. If a business has revenue of £45,000 and total costs of £36,000, they would have an overall profit of £9,000. And we can see the calculation for that would be £45,000, take away the £36,000, gives us the £9,000 profit. Whereas for a loss, if a business has a revenue of £25,000 and total costs of £32,000, they will have an overall loss of £7,000. So again, the calculation for that one would be £25,000, take away £32,000 equals minus £7,000. Now let's talk about the different kinds of profits. So this is for gross profit. Gross profit equals revenue minus cost of sales. So let's put this into an example. We have a watch company. The price they sell their watches for are £45. So the customer is paying £45 for one of their watches. They're selling, in this example, 100 of those watches, and the cost for the business to make one of these £45 watches is £15. So how would we work out the gross profit for this business? So we would do price per watch times quantity sold equals revenue. So the revenue would be £4,500. Cost per watch times quantity equals the cost of sales. Cost of sales would equal £1,500. And then we would have our £4,500 figure being our revenue, minus our £1,500 figure being our cost of sales, giving us a gross profit of £3,000. And then we have net profit. So net profit is gross profit minus operating costs. So we're going to carry on from that previous example. Okay, so the gross profit for that previous example was £3,000. And now we have some additional information about some operating costs. We have an annual salary to pay of £18,000, rent per calendar month of £400, and a website fee of £15 per calendar month. So firstly, what we would need to do is divide that annual salary into the salary for the month. So we would take that £18,000 and divide it by 12, and we get the answer of £1,500 a month. We then add the other operating costs together. So we have the £1,500, the £400, and the £15 to equal £1,915 in operating costs. We then take our original figure from the previous example, so the gross profit of £3,000, and we take away the operating profit that we just worked out, being the £1,915, which gives us our net profit of £1,085. And that is everything for today's video, guys. Thank you very much for watching. I hope you learned some basic financial calculations for business studies. And with that being said, we will see you in the next video. Goodbye.